Hello there. Welcome to Geopolitical Analyst Day. For decades, the US dollar has been the dominant global currency, used for trade, investment, and as the standard reserve currency held by countries around the world. The dollar's supremacy has allowed the United States to exert immense influence on the global financial system, shaping everything from international trade agreements to the way foreign governments manage their economies. However, in recent years, China has been making a concerted effort to challenge the US dollar's status, positioning itself as the main player in a global financial shift. This strategy to diminish the dollar's dominance is part of China's broader ambitions to reshape the global economic order. But what does this mean for the US and the rest of the world, and how will the United States respond? The dollar's dominance and China's ambition. The U.S. dollar's global dominance began after World War II with the Bretton Woods Agreement of 1944, which established the dollar as the anchor currency for international trade and reserves. Even after the collapse of the Bretton Woods system in the early 1970s, the dollar remained the dominant currency in global financial markets. It became the preferred medium for international trade, especially for key commodities like oil, gold, and natural resources. Additionally, the United States' political and economic power reinforced the dollar's centrality in global finance. In recent years, however, China has emerged as a powerful challenger to this long-standing status quo. As the world's second-largest economy, China has become increasingly assertive in its economic policies and international trade relationships. One of China's key goals has been to reduce its reliance on the U.S. dollar, and in the process, challenge the dollar's supremacy on the global stage. The primary motivation behind this effort lies in China's desire for greater economic independence and security. As a major trading partner with countries around the world, China finds itself vulnerable to the whims of the United States, which can impose sanctions or leverage the dollar-based global financial system to its advantage. By reducing its reliance on the U.S. dollar, China aims to shield itself from these risks and assert its influence in the global economy. China's strategy, de-dollarization and the rise of the yuan. China's strategy to take down the dollar is multifaceted, involving a variety of economic, political, and strategic initiatives. The cornerstone of this effort is the internationalization of China's currency, the yuan, also known as the renminbi. For years, China has been working to position the yuan as a global currency alternative to the U.S. dollar. This involves encouraging its use in international trade, investment, and finance, as well as strengthening the yuan's role in global reserves. One of China's key moves in this direction came in 2016 when the International Monetary Fund, IMF, included the yuan in its basket of reserve currencies alongside the dollar, euro, pound, and yen. This was a significant step in China's quest to make the yuan a more prominent global currency. With the IMF's endorsement, the yuan was given greater legitimacy as a global reserve currency, and its use in international trade began to rise. China has also been actively promoting the use of the yuan in bilateral trade agreements with countries around the world. In particular, China has sought to replace the U.S. dollar with the yuan in its trade relationships with countries in Asia, Africa, and Latin America. China's Belt and Road Initiative, BRI, a massive infrastructure and development project spanning dozens of countries, has provided a platform for expanding the use of the yuan. Through the BRI, China has been able to facilitate trade agreements and financing in yuan, thereby reducing reliance on the dollar. Additionally, China has been encouraging the use of the yuan in commodity markets. In 2018, China launched the Shanghai International Energy Exchange, allowing oil to be traded in yuan. This was a direct challenge to the dominance of the U.S. dollar in the global oil market, where the dollar has long been the standard currency for oil transactions. By offering oil contracts denominated in yuan, China aims to make the yuan a more attractive alternative for countries and companies involved in the global oil trade. Another significant development in China's strategy is the establishment of the Cross-Border Interbank Payment System, CIPS, which was launched by the People's Bank of China in 2015. CIPS is an alternative to the SWIFT system, the global messaging network used for financial transactions. By offering an alternative to SWIFT, China has taken steps to reduce its dependence on U.S.-controlled financial infrastructure, further distancing itself from the dollar-based system. China's digital yuan, a new weapon in the de-dollarization fight. A more recent and ambitious development in China's strategy to challenge the dollar is the creation of the digital yuan, also known as the digital renminbi (ECNY). The digital yuan is a central bank digital currency, CBDC, that is being developed and tested by the People's Bank of China. Unlike cryptocurrencies such as Bitcoin, which are decentralized and unregulated, the digital yuan is fully controlled and issued by China's central bank. The digital yuan has the potential to revolutionize global trade and finance by providing a state-backed, digital alternative to the US dollar. One of the key advantages of the digital yuan is that it can be used for cross-border transactions, enabling China to bypass the traditional banking system and reduce reliance on the US dollar. The digital yuan could be particularly attractive to countries that want to conduct trade with China without using the dollar as an intermediary. In addition to facilitating international trade, the digital yuan could also be used as a tool for China to extend its geopolitical influence. By offering an alternative to the dollar-based system, China could attract countries that are looking for a way to circumvent U.S. sanctions or avoid the risks associated with holding U.S. dollars. As more countries adopt the digital yuan, China's influence in the global financial system would grow, further challenging the dollar's hegemony. The U.S. dollar's resilience and potential U.S. response. While China's efforts to take down the dollar are significant, it is important to recognize that the U.S. dollar still holds a commanding position in the global financial system. The dollar's dominance is not easily displaced, and there are several factors that have helped to preserve its centrality, despite China's rising ambitions. First, the U.S. has a highly developed and liquid financial market, with the largest and most influential stock and bond markets in the world. The dollar remains the currency of choice for global investment, with trillions of dollars in assets denominated in U.S. dollars. Additionally, the U.S. dollar's liquidity and stability make it an attractive safe haven during times of global economic uncertainty. When markets are volatile, investors tend to flock to the dollar as a reliable store of value. Second, the dollar is deeply entrenched in global trade, particularly in the energy sector. The so-called petrodollar system, where oil and other commodities are traded in dollars, has been a key pillar of the dollar's dominance. While China's push to trade oil in yuan is a challenge, it will take time for the yuan to replace the dollar in global commodity markets. Third, the United States retains significant political and military influence on the global stage. The dollar's dominance is closely tied to America's geopolitical power. The U.S. has a network of military alliances and strategic partnerships that help maintain the dollar's status as the world's primary reserve currency. Countries that want access to the U.S. market or security cooperation with the U.S. often find it in their interest to hold U.S. dollars in their reserves. Nevertheless, China's challenge to the dollar cannot be ignored. The United States will likely respond to these efforts with a mix of economic, diplomatic, and strategic measures. The U.S. has already imposed sanctions on countries like Russia and Iran, using its control over the dollar-based financial system as a tool of foreign policy. In the future, the U.S. may take additional steps to counter China's efforts, such as ramping up sanctions or pressuring countries to continue using the dollar in global trade. Moreover, the U.S. could seek to strengthen its alliances with other countries that are also concerned about China's growing influence, including Europe and Japan. By building a coalition of nations committed to preserving the dollar's dominance, the U.S. could push back against China's attempts to reduce the dollar's role in global trade and finance. Will China succeed in dismantling the dollar's dominance? The question remains, will China's strategy succeed in dismantling the dollar's dominance? While China's efforts to promote the yuan and create alternatives to the U.S.-dominated financial system are impressive, it is unlikely that the dollar will be dethroned in the short term. The global financial system is deeply rooted in the dollar, and transitioning to a new currency system would require overcoming significant economic, political, and institutional hurdles. However, China's efforts are part of a broader trend toward de-dollarization, and over time, this could lead to a more diversified global financial system. The yuan's growing role in international trade and investment, along with the rise of digital currencies, could reduce the dollar's dominance in certain sectors. While the dollar is likely to remain the dominant global currency for the foreseeable future, China's push to take down the dollar has already made its mark on the global economic landscape, and it is a challenge that the U.S. will have to address. Conclusion: China's strategy to take down the U.S. dollar represents a significant shift in the global financial system. By promoting the internationalization of the yuan, developing alternatives to U.S. controlled financial infrastructure, and creating a digital currency, China is positioning itself as a challenger to the dollar's long-standing dominance. While the dollar's hegemony is unlikely to be dismantled overnight, China's efforts are contributing to a broader trend of de-dollarization that could reshape the global financial order over time. The U.S. is likely to fight back, using its economic and geopolitical leverage to maintain the dollar's central role. But the growing influence of China in global finance cannot be ignored. The future of the dollar, and China's ability to challenge it, remains an open question, but one that will have profound implications for the global economy.